Hello, this is Dave and welcome to Equity Story. I'm with the incredible Ocelot, Claude, and this is just a general share advice and not personal advice as per the general advice warning you can read here. And this is obviously TradeWatch, not Ask the Analyst, but it's the same warning for the advice. Right, let's go first. And I'm going to try and keep, I know this is fundamental Wednesday, so I'm going to try and keep as quiet as I can on the charts, and I'm going to let you go for it. But Webjet, which I did have on Einstein's, funny enough, on the weekend because I quite liked it. And again, the chart's picking the story, and it's up 4.79% today.
That's right.
What do you make of it, champ?
Well, Dave, for a trader, I wouldn't kill this on the fundamentals at all, just because what we have now in the most recent result is the second half of the year representing a more normalized trading situation. So they've just reported now their results, their half-year results for the second half of 2020-23, and so that takes them up to, I think it's end of March. So as you can imagine, through September through March, they've had much more normalized trading, and that gives us a little bit of a better idea of what their underlying earnings power is. Now, there can be no doubt that, a lot of their metrics have rebounded now. So they're back up to, on many metrics, above where they were before COVID disrupted international travel. So for that reason, you've got to say, well, probably you can use that second half as a bit of a tool to try and value the stock. Now, if I look at the second half and take a very, charitable view of it and allow a little bit of growth and accept all of their underlying adjustments and all that kind of thing, then you get a reasonable price at the moment, like maybe 20 times earnings or 22 times earnings, although these are underlying earnings, not statutory earnings. So looked on from that prism, the valuation isn't insane. It's not like, oh my God, you've got to sell it, but it's not cheap either, because as I've said, that's like taking a very charitable view of it. Debatable whether you'd actually want to pay that price just purely based on valuation. Having said that, as you've said, the chart trend is good. On top of that, the earnings trend is positive as well, and that may go on for a little longer. The company was forced to do a little bit of cost out when it hit hard times in COVID. So it's quite possible that, it could have it could still have a little bit more growth. So overall, that's where I'm at with Webjet. Probably think of it as a hold from a trading perspective. I wouldn't get shaken out based on any fundamentals there.
Brilliant. Thank you very much for that. And you know what, if you look, it's actually swinging quite nicely, and the short-term traders might be looking to take a profit around that sort of 790 level. LLL, lithium, all the lithium stock charts, they came out with some, I had a look at most of them were sort of over that sort of 1.5% LIO. So I didn't think they looked too bad. Again, look at the traders, typical. That as soon as it hits the near the all-time highs, all the traders come out and start taking a profit. So I think everyone who's in this stock got to understand it's just being heavily traded. People are looking at resistance points. They go, oh, is that they're selling? So they're not really buying this on fundamentals. This is purely technical traders looking to buy it. So don't be greedy. If you made a profit on these things, especially LLL, I know they've got, you could always, I'd take a profit and maybe look to buy it back again sometime in the next few weeks. Buy it off the daily chart. If you look at that daily, it's had a massive run. It could come back to trend. So there's a lot of risk there. And if you were in that one, I can give you a real tight stop loss around. If it got to 74 on the daily, well, maybe the FOMO's over for the short term.
So fundamentally, I think, obviously I don't cover a lot of mining, but I have had a look at this one. I think that it is interesting because it has high quality deposits and a lot of lithium. So that could make it like a decent lithium speculation stock. The downside of it is that it's a long way from making a profit or it's just an exploration company really at this point. So not a safe bet for sure.
And you have to be realistic. A lot of these will never get off the ground, right? You don't know which one it's going to be, but it's definitely a lot of danger there. DBI came out with their distribution guidance, and So a 7% increase over the 22-23 distribution guidance in October 22. So they pay quarterly, and it's a nice little dividend payer, this stock, Claude, and I think it giving around a sort of 7.4, 7.5% dividend. So for those dividend junkies out there, I think it's well worth having a look at this one.
Yeah, infrastructure stock, Dave, 5 cents a quarter, so 20 cents a year. Yeah, like I think that this is the kind of company you can buy as a dividend play. Although just keep in mind it's not fully franked. So yeah, if just something to keep in mind when you compare it to fully franked dividends.
Now, you and I, I think obviously looking terrible lesson here, don't buy stories underwater, and look, bang, as soon as it breaks the water level, it goes, what, from 5 down to 329, and we've got a falling knife. Now, there's a warning here, Claude, and thank you very much. You want to give, your members, you're going to give an equity story members a little bit of a warning on these type of companies, so far away.
Yeah, so they said that trading conditions observed throughout April and May to date have further tightened, indicating that some customers are reducing their spending, and the group expects, I beg your pardon, this subdued environment to continue for the balance of FY23 and into FY2024. So what they're saying here is essentially this is not a resilient business. It's a very optional discretionary spend. And what I've been saying for like 18 months now is that just retail is going to be difficult. So I guess and this sort of fits nowhere in retail because it's not a high quality retail business. It's not got a punchy long-term track record. It's not amazing. It has universal stores. It has thrill stores. There's nothing special about it as a retailer. And yet, at least prior to the drop today, it's not trading at like a dirt cheap retailer either. It's trading, like a middle of the road retailer. I think that middle of the road is going to be really tough. You want to either be, buying the really high quality stuff like Lavisa or JB Hi-Fi when things look ugly, because those are the ones you can be sure will like recover into a recovery. One of these ones, yeah, there's nothing going for it fundamentally, but I think it's a warning for all retailers. Like you need to have a plan. It's going to be tough business, quite likely for the next couple of years.
Brilliant. Absolutely fantastic.
I wouldn't be surprised if we see more retail downgrades in the coming years. And the only thing that's going to protect you, like in the coming months, the only thing that's going to protect you is either a really low share, like a really low multiple that already assumes the downgrade, or you might, have a smaller downgrade, but people think, oh, this too will pass, and it's such a high quality business that I'll stick with it.
Brilliant. And yeah, it's like you said, you've got to take everything on its own merit, but this whole sector is certainly a little bit, you've got to be a little bit concerned there. Last night we had a lot of fun with RC Analyst Live, and you're absolutely great. So thank you very much for that, Claude. Was any other stock that sort of you wanted to mention today, or
I have a bunch of little ones that have little bits of fundamental news that we could talk about just quickly. I don't think there are any charts that look as good as Webjet's. If you want one that's lining up the fundamentals with a decent chart, that's probably where you're going to go. A little specky game developer called Playside has announced that it's basically starting to publish other people's games. So even though it basically can't predict the revenues generated by the game, this could be a positive. So mild positive there. Not sure if you think that there's anything in that chart. It looks pretty. The business doesn't look great to me, but it did have a positive news out this morning, so I thought I'd mention it.
We actually did trade this one up when it had that sort of breakout here, and Wolfie did really like the story, and we actually did well on it. But obviously when it broke trend, but it's one he's liked the fundamentals, and he even bought some of the eggs where you can buy some of the drawings off the company. I think he bought 2 eggs, which cost him $1,000, which I think later he sold for about 200. Poor old Wolf. But Yeah, okay. But saying that, listen, I think we can end it there. It's a pretty quiet day. There isn't too much to talk about.
Oh, I've got one last one for you, Dave,
Go
which
on,
I got to
go on.
give you because it's got a good news. Is PLT plenty?
Yeah, how come this story always delivers, but the charts always failed us? And it's it's funny, isn't it?
Yeah, so lending platform there, personal loans, generally pretty high risk kind of stock. You wouldn't generally, I mean, I wouldn't generally be investing in this no matter what, because it's just typically a sector that gets blow ups. But I think the positive here is that they've reported a cash net profit after tax, so probably de-risking the business a little bit. Look, they've got $1 billion loan book, so many things like car loans and stuff like that. So, I would consider it super duper high risk, but I just wanted to acknowledge that, it did have its results out today and it's trading up 15%. So a little bit of a de-risking event there could be a turnaround, but I'm guessing you're not going to like the chart, but I don't love the fundamentals either.
Well, it's a good point. It's just like, I totally get it, what you're saying about it with this one, but for us, it's still a hard trade because yes, I think it could go back up and retest that 51, but we'd rather buy things which are above the water level where we feel it's more likely to trend. Funny enough, was a classic example with a really lovely guy talking about Zip, and he was trying to trade Zip from that sort of 60 to 80, and I just said, it's just too hard. I think there's no reason why you can't make that trade, but you're much better off. You're much better off making the easy money and
I think don't get sucked into these ones at this point of the cycle is my opinion, basically. So I agree with the chart there, the longer of the PLT one as well as if don't get sucked in. But yeah, it was a positive today, so I wouldn't be jumping on that though.
And again, as much as I do like the Lavisa, and it did reasonably well when we had it as a hot stock, it did have a jump up of 5-6%. But it needs to hold trend by the end of the week. Otherwise, you've got to get out of it because that's exactly what you're talking about. This sort of these sort of stocks, the market could just get a little bit scared off, and they could all have possibly a reasonable sell-off.
It's hard to find any retailer, Dave, that looks really good. But I mean, I'd be hanging out in something like. I'm not, by the way, but look at BST. That's like a turnaround story, cracked, smashed out already kind of thing. Yeah, even that looks bad. Everything looks bad. At least this is on like PE7 or whatever. But yeah, no, retail tough at the moment. Anyway, look at it.
All right, good to see the gold having a little bit of a move. All right, hopefully we'll and look at your XRO. The XRO is still going, isn't it?
Yeah, look at that, Dave. Far out. Wish I'd held on to that one.
Well, I mean,
because it's coming back into the quality stocks camp. That's why.
Yeah, and you're seeing the Nasdaq do well, and like you think that 120, 130 certainly looks on the cards, and most probably it's still not too late to get into this.
Nice one.
All right, have a lovely day. Now you're very good because I know your whole family's sick. You've all got colds and flu, so thank you very much for doing this Trade Watch today, Claude, and hopefully, I don't know, are we seeing you Friday or?
Is Wolfie around on Friday?
No. Yeah, are you?
Then I guess you'll see me. You'll see me.
Good. All right. Get better. Lots of whiskey and hot milk, mate. All right. Speak to you then.
All right. Talk to you then, Dave. Thanks for watching, everyone. Bye.